Well, that's what I've been telling everybody. This is unique. This bull run 2020 2021 is we've never seen anything like it before. Structurally, it's completely different, right? So you can template all you like the price pattern from 2013. Oh, we're going to do a double pump, but the underlying investor activity is very, very different. Yeah, I mean, Bitcoin's maturing. Much larger players. We have institutions coming along. We've had a lot of speculators that are trading correlations, which we saw this last week as by investors. They're buying on the exchanges, they're scooping it up, moving it off to cold storage, and you can look forensically at the blockchain and go, oh, okay, they're buying. And actually, right now, not very common is that you see the long-term investors. And when I say long-term, I mean, it's not really long-term. You don't know how long they'll hold those coins for, but these are the guys that keep accumulating. They buy, they seldom actually sell any of their coins. And then you've got these guys that are like what I call the swing traders, the medium-term guys that buy and sell. And those guys are buying as well. So everyone's buying right now. Meanwhile, the price is collapsing because you've got this new kind of speculative risk-off trading. You know, people are like leverage trading and they're selling down. That's the only explanation for this price pullback, is that we had the Evergrande, and also we had the Fed tapering notice, and you can see the S&P 500 starting to test support. And we went into this last weekend like that, and on the weekend trading it started to look very weak, and it sold off, and Bitcoin likewise started selling off. So it was just selling off on a correlation to the S&P 500. Nothing but spot buying. That's one of the things that's interesting in this year, is that we've got different actors in the market, and they're all doing different things. And obviously I look on chain, so I look at what medium long-term investors doing. To see what speculators doing, you really have to use derivatives data, and that's not quite as reliable. But yeah, so we've had this kind of mismatch, and I mean, I think a few people got very, very bearish, but there's really no cause to be super bearish. I think there's even a few people that are they still think we're in a bear market, but like, again, structurally on chain, what the real investors are doing is, we've never been in a bear market. Arguably, you might have been tipped into a bear market, but more like a little bit of a bear market within a greater macro setup. And so, yeah, that's the interesting thing. This cycle is not a cycle in my reckoning. Like, oh, this cycle is different. I'm like, it's not even a cycle. Like, I don't think we're going to top and we're going to have another 4-year revolution where we have like a 1-year bear market. It's not looking like that at all. Yeah, I'm looking at it very similar, but not similar. I don't call it a casino, because a casino is, you can't beat the house. Whereas I think of it more like venture investment. Like, Bitcoin is money. So I'm a maximalist on Bitcoin as money. I think it's one. And people often think I'm a maximalist, but I'm not. I think that there will be a lot of interesting technology that's going to come out of the space. And this is one of the problems if you're in Bitcoin. If you start talking about stuff that's outside of Bitcoin, you're considered promoting scams, which I don't think is the case in 2021. 2017, a lot of it was scams, and there's a lot of Ponzi's, and still is now, but there's some really interesting technologies out there. The due diligence is fully available if you want to be the VC type. So, let's face it, Bitcoin is not going to do a 10,000x from here. Other than Bitcoin, fiat going to infinity in terms of money printing, it's not, in terms of real returns of things you can buy, maybe in a gold-based return, it's not going to do another 10,000x. We might get 100x, maybe 1,000x, but over the next, until saturation. And then, so if this is your money, then it's like, some of these technologies are going to be pretty interesting, and so I do think there's value if you want to invest in some of this stuff, but you really have to be like an angel investor in a seed level startup. which I've done because I've done startups in the past, oh man, it's a 98% failure rate, right? And you would call that a scam. Like you would go, oh, you raised money, you told a pitch, and then you try to build something, and then you kept raising money and try to build something, and you haven't got any customers yet, but no one does. You're just trying to get critical mass, and eventually you run out of money and it collapses. And then, like, as a seed investor, you don't call that person a scammer. You just say that was a failed high-risk investment because only 2% of the 100% get through to being, a liquidity event. These are very similar. They're very untested technology. No one's figured out this stuff before. And behind all of this, some of the really good projects, and actually, luckily, like the top 20, many of them actually are doing some interesting things, right? And so it's not like if you looked at 2017, the top 10, top 20 were like full of crappy projects. Yeah, that Bitcoin is money, and then you can try your hand in venture investing into this stuff that retail can now do, because you can't do this on equities because the SEC have like shut all that down since the dot-com crash. Sarbanes-Oxley has like made the requirements for a growing venture to be too high. So you get the likes of Uber becoming like 100 billion or whatever valuation before even it looks at getting listed. And no one wants to like invest in something that's had the first 10,000x taken by the VCs and the rich guys. And so here we've got this realm where retail can do their own research, which some of them are very sophisticated. Yeah, and I totally agree. And that's exactly the framing I think about, is that it's the only game in town for a hard money, which is really the only game in town behind a hard money is decentralization. And everything else is a permissionless network, which is useful. It will enable everyday lives. But right now, the thing that's really important geopolitically is a hard money that is owned by the people. So I've been thinking about the statement I made about it's like everything that Bitcoin touches, it decentralizes. And I've seen so many ways that that's played out, like Bitcoin was banned in China. And, because Bitcoin touched China and China didn't like this thing that they couldn't control, so they banned it. So then Bitcoin became more decentralized. Now the fight right now is, the regulatory war that's happening, that they want to shut Bitcoin in and a lot of the permissionless networks down. If they succeed in America in putting through these regulations that mute Bitcoin and altcoins, then what's going to happen is that there's going to be a lot of the entrepreneurial class that will move their companies out of the US and into these tiny little jurisdictions who are going to give it a shot. El Salvador is like one end of the spectrum. You've got Singapore, you've got Malta, you've got Switzerland, Zug, in there. So there's a lot of countries that are open to saying, your entrepreneurs come here. And so on the one hand, you've got like the EU shutting this down with the central bank. You've got the US like fighting with regulations. You've got China banning it. The three go away the future, and it's going to flock to all these emerging states. And it's essentially tipping the power, distribution of power to these smaller regimes. So like Bitcoin touches that geopolitically. So yeah, it's interesting. It's funny how this works. Like Bitcoin fixes this.